Wednesday, December 17th, 08:24 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Already halfway through the month, last month of the year, middle of the week. Going to go over the major stock sectors, and I'll include the stock indexes too. Since this is the last month of the year, the last quarter of the year, you have institutions that manage other people's money that do window dressing, as well as you have individuals that look to do that. Give you some insight. That means they're getting rid of the garbage, the bad financial assets they have, and they're buying the better ones, the ones that are in leadership positions. They're painting a picture on their portfolio to make it look like they are rock stars, where they're late to the game. Some of them, obviously, been in for a while. But again, those actions that are occurring, you can see in charts, because when they're unloading, you have sellers that are typically more sellers than buyers. And then again, for the stronger positions, you have more buyers than sellers. Nothing wrong with riding the wave, following the good leadership of winners. This is your investment portfolio. That being said, the S&P 500 is the go-to stock index that institutions and good, smart investors know you should be comparing your investment portfolio with of stocks. We also have this year, a lot of stocks in several indexes that were replaced. I shared quite a bit of that throughout the year. So here we are, looking at the 10-year chart, each candle is a month, of the S&P 500. Current candle's red. It has made a higher high, higher low. Look how small that candle is. That's a dodgy candle. Dodgy candles mean one of two things. It means indecision or potential reversal. So it's a big consolidation up here too. And that big wick last month, the midpoint has not been tested yet. Again, it's showing stronger signs of distribution. Distribution usually occurs at the top. Smart money selling. Yeah. So we may have a pullback occurring here soon. But the positive thing is, again, we made a higher high than that prior month. Now let's continue looking at the other indexes that are part of the S&P 500. The NASDAQ 100. It hasn't even taken out the high nor the low of last month. It's inside range. The Dow Jones Industrial Average, all-time new high. Outstanding. It's performing better than the NASDAQ 100 and better than the S&P 500. Again, small trading range. The Dow Transports, new high for the year. Can you believe that? The transports, still below the highs of the prior years, but up strong. And the Dow Utilities, we broke the low of last month. Big, wide trading range. Big difference in the S&P 500. Look how big this candle is. Again, this index, these companies pay high dividends, and people are less interested in that at this time, and they're likely rotating to growth stocks, different class of stocks. Russell 2000, all-time new high. Interesting, small caps. Again, Russell 2000 is not part of the S&P 500. All these other indexes I showed you are inside the S&P 500. So that's interesting. We have small caps, again, lower interest rates are beneficial to the Russell 2000, more so than the other stocks. Now we'll go over to the 11 sectors inside the S&P 500. These are all stock ETFs that can be purchased. Technology, just like the NASDAQ 100, inside candle for the month, indecision. Healthcare, also inside candle for the month after that big move up. So again, we're still below the highs of last year. A big turnaround. Healthcare. This month, Congress has a decision to make: either do nothing and pass no policy or update the policy. Again, the United States has a healthcare policy where it's giving welfare to people in the insurance industry that are needing it. What does that mean, welfare? Well, they help to compensate what they cannot afford on their own. And if that does not continue that funding, then they will have a tough decision to how to manage their money for their healthcare, their insurance. Do they keep health insurance? Do they take a lower quality health insurance? Or do they cut back on something else and pay the higher cost? That will have a big impact on the health and welfare of the nation. Again, the one party controls Congress. Again, I say again, the legislative branch, the one that makes the laws, writes the check, there's one political party that controls that right now. So this stock index is affected by, again, political decisions. Financials, new high, outstanding. New high for the year, outstanding financials. Does your credit card have higher interest rate? Are you carrying debt? Consumer discretionary, also new high for the year. So these are the sectors. Interesting. Communication services, we took out the high of last month, but just shy of the all-time high for the year. Industrial, new high for the year. New high for the past 10 years. Outstanding. Consumer staples, took out the high of last month, but still below the highs of last year. Energy, took out the high of last month, still below the high of last year. And utilities, yep, just like the index. Took out that low, broke the low of last month. Real estate, inside candle for the month, way below the highs of 2021. Again, I shared Patreon page. There's already short sales occurring. Foreclosures have been occurring for a while. Foreclosures are bad. When you have short sales, that's adding more problems to the real estate market. XLB materials took out the high of last month, still below the highs of the year. And then, so again, we have big divergency. I showed you from the transportation and Russell 2000. They're in the leadership for the stock indexes. And then for the stock sectors, it's not technology right now. I showed you one of them was financials. Again, we're not done for the year yet, but very close. I'd highly recommend you stay on top of your portfolio. Get rid of losers, add to your winners. And they don't have to be just equities. There's other financial assets, currencies, commodities, and others. Thank you as always, spend just a little time with me. That's it for the video. Thank you for watching.